Savage of Wall Street, check it in for the week of April 28th, 2025. What are we going to do? How are the markets treating us? Earnings season's here. We have a lot of green candles going. SPY looking a little delicious there. But is it going to hold the $552 mark? Let's talk about it. Here we go. So, first and foremost, elephant in the room, SoFi has earnings this week, and a lot of people are very excited. I am one of them. However, it's gone on a tear the last few days, right? Is it going to keep on going? Is it going to 20? Is it going to go to 25? Let's look at the macroeconomics. Let's look at what's going on in the trading world and just the economic world in general, right? These tariffs, they still haven't hit, but they will hit next week. At the end of next week, yes, sir. They're going to start putting the little pressure on, and what's going to happen to our stocks? The Savage stocks have been doing very well. SMCI is up. SoFi's up. Unity's up. C3ai is up. RIVN is up. The list keeps going on and on, right? Palantir is up. Roblox is up. What's going to happen this week? Well, you have to ask yourself, are companies going to make more money than they made last year? Bottom line, right? If you look at what everything that is going on, right, with the tariffs, with the uncertainty of the market, what are we looking for? We're looking for good news, right? So, okay, Tesla had absolutely abysmal earnings, and yet they are up. You got to ask yourself why. Could it be that the worst of the worst was already baked in? Worst case scenario, Tesla comes back down to like the 250 area? I don't think so. I think that, we're still in a bear market. We were having a nice week. I think there's a lot of hopium in the air, but at the end of the day, don't forget to take money off the table. We are option riders. That's how we make our bread, and that's how we're gonna get paid. I say that there's a lot of FOMO going on. The algos were showing us oversold, so at this point, people are basically FOMOing. Sorry with the shaky of the camera, but I'm kind of holding it in my hands. Gonna do a quick 10-minute, 15-minute video because I'm actually on my work break, my little lunch hour, so only 15 minutes is all you'll get. SoFi, it's looking good. It may hit $13, right? But at the end of the day, what are the earnings going to show? I think we're going to show some similar numbers that we've been seeing the last few, and I think we may hit 13, perhaps even 14, but I don't see us going to 20. What should you do? Well, take advantage of the volatility. The IV is pretty high right now, so I don't think it's above 100 just yet, but it'll probably get there. $15 covered calls for 2026 will bring you in a few bucks. So basically, you're saying to the market, right? My SoFi, I bought it at $8-9. I'm willing to sell it for $15. You're doubling your money. Guess what? You're taking in $200. What is wrong with that? Absolutely nothing. C3ai still have not had earnings, and I think they're kind of riding the coattails of Unity at this point. But Unity is also going to have earnings. I think they're going to show some good numbers, but at the end of the day, the tariffs they have not hit yet. So is everything baked in? I don't think so. I think that we are going to probably start seeing a little more pain starting next week, maybe towards the end, and then definitely the following week when people start seeing just the numbers of what will have to get paid and all that money that's leaving. We also are not at all-time highs at this point. I think that we're just scratching the surface and trying to come back to um, better lows, I guess. But have we hit rock bottom? That's uncertain at this point. I say let a lot of companies show that their numbers are actually not going to be sustainable as of the last year, and they're going to lower their guidance, right? I mean, for crying out loud, companies are starting to give you two scenarios at this point, right? That doesn't happen. That's not normal. And you got to ask yourself, is this the type of market that I want to keep my money in without taking money off the table, right? I personally, I'm selling covered calls. The cash secure puts at this point are printing, and so I started buying them back last week. Some of them I have not just yet. I want to see what this next week has to give us, but for the most part, I'm trying to take advantage of what the market is giving me, right? We're not trying to time the markets. We're not trying to gamble. We're trying to make sure that we get the most out of our collateral, which is our stocks. Now, do you have C3ai? It was just almost $23. It came back down to 22. I say if you have some C3ai, I don't think it's the most terrible thing in the world to sell $25 covered calls for 2026 January. Same thing with Unity. 25s for 2026 January, not terrible. Bring in some dollars, man. Roblox, sell some 70s. Palantir, sell some 100s for 2026. See what happens. Bring in dollars, bring in a lot of money, so that if for whatever reasons during earnings companies start giving some lower guidance and the market tanks, guess what? You're covered. Worst case scenario, you're selling your stock for a price that you're okay with, and you're bringing in cash right now so that you can make it real. Again, this is not financial advice. This is just information as to how I'm playing the market. ASTS, $20 cash secure puts for 2026, even March, not a terrible thing. SMCI, $35 cash secure puts for 2026, March, not the worst idea. Because then you would be basically buying, SMCI for $35. It's a little higher than that at this point, right? You could do 30s. 30s would actually be great, because then you'll be getting a few dollars for selling 30s, which means you would be actually buying it for 26, $27. Not a terrible trade at all. So that's kind of the approach that I'm taking with this nice little mini bull run we have going, because it's still to be determined how it's going to be in the long run, right? Now, remember, a couple of videos ago, I said that there is a possibility that we have a little run, but there's bull runs during bear markets, just like there is bear weeks during bull markets. It's just a nature of the process, right? Look at the SPY. I say have a good look at the SPY and see if it holds 552. If it doesn't and it backtracks, then we are probably gonna see a little bit of a red day or two. At this point, trying to guess the market, it's not something that I would say is the smartest thing to do. See what it gives you. Volatility is your friend. Chaos is cash. Take advantage of that by selling covered calls whenever we have a run of, say, 3%, 4% in the total overall market. If we have a day that's, we're up 1,000 points, take advantage of that. If we have a day that we're down 1,000 points because the commander-in-chief said something dumb, take advantage of that. Sell some cash secure puts. Is that company you're looking at near 52-week lows? What are we gonna do? So take a good approach, take a cautious approach when it comes to investing in the next few weeks. See what guidance these companies that you're looking at are giving you, and based off of that, make an educated guess and see, are you okay selling the stocks that you bought for the price you've chosen? For example, if you bought SoFi at $10, at $11, are you okay selling it at 15 in the future, because you're kind of at that point making 30% or more, and you're bringing in some cash if you were to do some covered calls? Absolutely nothing wrong with that. I try to give you guys kind of like a little rough overview of what this week is bringing. However, nobody really knows, right? The market could go up, it could go down. Warren Buffett doesn't know what's going to happen, and neither does Jamie Dimon, right? What they're doing at this point is reacting to the Trump stock market, and I say that's not a bad deal. I'm not looking at RSIs at this point as much as I'm looking at just the way the market has acted in the last 2 months. I'm not going to try to trade the Joe Biden stock market, because that market is gone. 52-week highs are gone. At this point, I think I see a lot more pain and volatility in the future, but it's all to be determined. What do we got here? Let's say Savannah Carter saying hi. Hey, Savannah. Neil saying hi. Onakli saying hi. Hello. Joey V, what's up, brother? How you doing? We got Ray Sherlock. What up, Ray? Anyhow, I wanted to make it short and sweet. Take advantage of the market's volatility and get paid. At the end of the day, that's exactly what we're doing, right? Give them nothing. Give them nothing. Sell your covered calls. Take big chunks. Red days that are really, really red, or even a red week. Sell your cash secure puts at a price point lower than where it is at. If it's at a 52-week low, even the better. Make sure these are companies you see yourself holding for at least 5 to 10 years. That's what I'm doing. I'm holding cash on the side. Cash is king at this point, so make good use of it, right? Try to look for some good entries on companies that you've been eyeing, but I wouldn't make like a full-on FOMO type of move, or YOLO type of move. I start taking nibbles, right? If Nvidia gets down to like in the 90s again, take some nibbles. Palantir gets down to like the 70s, the 60s again, take some nibbles. SoFi, sell cover calls. Unity, sell cover calls. C3ai, sell cover calls. Roblox, Palantir, sell cover calls. Nvidia, I would not be I don't think it's the worst thing in the world to sell some 130s, 125 covered calls for 2026. Bring in big chunks. Get paid to hold Nvidia. Worst case scenario, you sell it for 125, 130. That's $13,000 in your pocket, and you're bringing in, anywhere from $600 to $1,000 or more for making that stock pay rent. And that's the way you got to look at things. Anyways, I got to get going. Gotta go eat my food. So you savage, take care. And remember, cash is king. Chaos is cash. Peace.